During a trading session, there's a moment when the real influence is no longer coming from the chart in front of you. It's coming from what just happened. A loss, a missed entry, a strong win, or a frustrating stop-out may already be over, but something from that moment is still with you. You're sitting at the same desk, looking at a new candle, yet your internal state is being shaped by the previous trade. Most traders believe that once a trade is closed, the emotion is closed with it. They assume that moving on to the next setup means starting fresh. In reality, emotions rarely reset that cleanly. Frustration, relief, urgency, or confidence often linger in the background. Even when they're no longer intense, they quietly influence how you read the chart, how quickly you act, and how much risk you are willing to take. This invisible carryover is what we call emotional residue. It's not a strong emotional reaction, but a subtle shift in state that accumulates across the session. One small residue leads to another, and before the trader realizes it, decisions are no longer being made from a neutral baseline. They're being filtered through the emotional memory of previous trades. Performance psychology shows that consistency in high-pressure environments depends on the ability to close mental loops, not just individual actions. Managing emotional residue is what allows each trade to stand on its own. Without this skill, even good analysis and solid execution slowly degrade as the session continues. Welcome back to the ComLucro channel. This session is part of our psychology mindset workout for traders. And today, we will train emotional residue management. By the end of this workout, you will understand how emotional residue forms, how to recognize when it is influencing your decisions, and how to clear it before it compounds. Awareness shows you the shift. Reset handles the moment. Residue management protects the entire session. So if you like this kind of video, please like, subscribe, and turn on notifications. And join the ComLucro community to support the channel and keep improving as a trader. Now that you understand what emotional residue is, let us look at how emotional residue management actually works. The purpose of this method is not to interrupt a strong emotional reaction in the moment, but to prevent past emotions from leaking into future decisions. This is about starting each trade from a clean mental baseline, instead of carrying subtle emotional weight from what already happened. The first step is residue recognition. Emotional residue often shows up as a slight shift in behavior, rather than a strong feeling. You may notice yourself rushing entries, hesitating more than usual, increasing or reducing risk without clear reason, or replaying previous trades in your mind. The key is realizing that your current decisions are being influenced by something that is no longer happening on the chart. The second step is mental closure. Before engaging with a new setup, you deliberately close the previous trade psychologically. This can be as simple as labeling it as finished, reviewing whether it was executed according to plan, and then letting it go. The outcome does not matter here. What matters is ending the mental loop so it does not stay active in the background. The third step is baseline restoration. You bring your attention back to a neutral internal state. Slow your breathing, relax your posture, and reset your focus to the present moment. This step is not about calming down intense emotion, but about clearing subtle tension or bias that may still be influencing perception and judgment. The fourth step is decision separation. You consciously remind yourself that the next trade has no relationship with the previous one. Different setup, different context, different risk. Ask yourself whether this trade meets your rules on its own, without reference to recent wins or losses. This step protects you from revenge trading, hesitation, and overconfidence driven by recent outcomes. The final step is the session integrity check. You assess whether emotional residue is building despite your efforts. If it continues to appear, the right decision may be to pause or end the session. Emotional residue management is not about trading more. It is about protecting decision quality. This ensures each trade stands on its own, free from the influence of the last one, allowing clean execution, one decision at a time. Now let us look at how emotional residue shows up during real trading sessions. Imagine spending a long period waiting for clean structure to form. You stay disciplined and do nothing, but over time, a quiet impatience builds. When a setup finally appears, you're technically correct, yet internally rushed. That impatience did not come from the setup itself. It came from the waiting that came before it. Without managing that residue, execution becomes slightly forced. With awareness, you release that buildup before acting. Another example appears after careful analysis that does not lead to a trade. You invest time mapping structure, marking levels, and tracking price, only to see the market move away without giving an entry. Nothing went wrong, but a sense of wasted effort lingers. That residue can push you to engage with the next opportunity too quickly, just to feel involved. When you manage it, you recognize that no trade is also a valid outcome and return to neutral before continuing. Emotional residue becomes especially dangerous after small consecutive losses. Each loss may feel manageable on its own, but together they leave a growing emotional weight. You may still feel in control, yet your decisions start to lean toward forcing trades or avoiding valid ones. By clearing residue between trades, you stop that accumulation. You separate outcomes and return to neutral before the next decision is made. Positive results create residue as well. After a strong win or a short winning streak, confidence lingers. You feel more comfortable, faster, and slightly less selective. If that residue is not managed, it quietly leads to larger risk or looser rules. When you clear it, you treat the next trade as independent, not as a continuation of success. As you apply emotional residue management throughout the session, you begin to notice how much influence past trades can have on future decisions. Instead of letting emotional traces build over time, you clear them intentionally. This keeps your execution stable, patient, and consistent, even during long or emotionally demanding trading sessions. Now here is how you can start practicing emotional residue management today. At the beginning of your session, take a brief moment to establish a clean mental baseline. Acknowledge that you are starting fresh with no carryover from previous trades, previous sessions, or outside events. Notice your breathing, your posture, and whether your mind feels open or already leaning toward expectations. As the session unfolds, pay attention to moments where subtle residue appears instead of strong emotion. This may show up after a long period of inactivity, after closing a trade exactly at break-even, or after following your plan correctly but feeling unsatisfied with the outcome. When you notice these traces, pause before engaging again. Do not analyze the next setup immediately. Take a moment to mentally close the previous event and return your focus to the present chart. Your exercise for this week is simple. Before every new trade idea, perform a brief residue check. Ask yourself whether your interest in this setup is coming from the chart itself or from what happened earlier in the session. If residue is present, clear it by slowing down, resetting your posture, and reaffirming that each decision is independent. As you continue this practice, you will notice fewer rushed entries and fewer hesitant executions. Trades stop blending together emotionally. Each decision feels cleaner and more intentional. Over time, your sessions become steadier, your judgment sharper, and your consistency stronger. You will not only manage risk better, you will manage your internal state across the entire session. Now, as we wrap up, remember where this practice fits inside your development as a trader. This session is part of our Psychology Mindset Workout for Traders, a series designed to strengthen each layer of your emotional performance. Awareness helps you notice emotional carryover. Residue management gives you the ability to clear it before it affects your execution. Keep applying emotional residue management throughout your sessions. The more consistently you clear emotional traces between decisions, the less past trades influence future ones. Over time, this practice builds emotional stability, protects your decision-making, and supports long-term consistency across every trading session. Please also remember that our mission here on the ComLucro channel is to give traders the clarity and confidence they need to make smarter decisions in the market. Every video, every course, and every piece of content we create has one clear purpose: to deliver practical, easy-to-apply knowledge that helps you grow step by step as a trader. Here on the channel, you'll find complete courses on smart money concepts, technical analysis for day traders, and trading psychology. Because trading isn't just about charts, it's also about mindset, discipline, and risk management. We also share lessons and insights from some of the most respected names in trading, professionals like David Paul, Alexander Elder, Tom Hugard, Mark Douglas, Al Brooks, Larry Williams, and many others whose experience has shaped the way we understand the markets today. If you enjoyed this video and found it helpful, please give it a like. It really helps more traders discover our content. And don't forget to subscribe and turn on notifications so you never miss our latest insights and strategies. If you'd like to go even deeper and access exclusive content, early video releases, and additional tools to support your development, consider joining the ComLucro trader community right here on YouTube. It's a simple way to support our work and a smart investment in your own growth as a trader. Thanks for watching, and I'll see you in the next video.